If you think the biggest opportunities in the US stock market are only in famous names like Nvidia, Microsoft, or Apple, you may be missing where the next wave of upside could come from. Because in 2026, some of the most interesting opportunities may not be the biggest stocks everyone already knows. They may be the under the radar US listed companies quietly benefiting from the same powerful trends driving the market higher. I'm talking about AI infrastructure, data center expansion, rising power demand, and the physical build out behind all of it. Now, let me be clear. These are not guaranteed winners. These are not get rich quick stocks. And this is not financial advice. These are simply lesser known US stocks with real catalysts, real business momentum, and reasons they could outperform if their stories keep playing out. In this video, I'm breaking down 4 under the radar US stocks that I think are worth watching in 2026, and more importantly, why. Let's start with the first one. The first stock is Applied Digital. This is one of the more interesting under the radar names tied directly to AI infrastructure. Most investors focus on the obvious names. They focus on chip makers, they focus on the biggest companies already dominating headlines. But the AI boom is not just about chips, it is also about the infrastructure required to support massive computing demand. That means data centers, that means power, that means high performance capacity, and that is exactly why Applied Digital is interesting. The company is positioned around next generation digital infrastructure, especially in areas connected to AI and high performance computing. What makes this story stand out is that it gives investors exposure to the AI buildout without buying one of the obvious mega cap names. That's the appeal. Instead of betting on the most crowded trade in the market, you're looking at a company tied to the infrastructure behind that trade. And in a market like this, that can matter a lot. If AI investment continues growing and demand for data center capacity remains strong, companies like Applied Digital could continue getting more attention. But this is also where the risk comes in. This is not a low volatility stock. This is not the kind of name you treat like a safe blue chip investment. Stocks like this can move fast in both directions, so the opportunity is clear, but so is the risk. If the company keeps executing, the upside could be meaningful. If growth slows or expectations cool off, the stock could pull back quickly. That makes Applied Digital a higher risk, higher upside idea, and for the right kind of investor, that can be exactly what makes it worth watching. Now let's move to the second stock, and this one may be the most surprising name on the list. The second stock is Target Hospitality. At first glance, this does not look like an AI stock at all, and that is exactly what makes it interesting. When people think about AI winners, they usually think about semiconductors, software, cloud computing, and maybe cybersecurity. They do not think about companies supporting the physical reality of massive projects on the ground. But that is where things get interesting. Big economic trends do not only reward the headline companies, they also create second-order winners. They create supporting businesses that benefit from the build-out behind the scenes. And that is the angle here. Target Hospitality is the kind of company that can benefit from large-scale development activity connected to major infrastructure projects. That means it fits into a bigger idea. The AI boom is not just digital, it is physical too. Massive projects require space, logistics, support services, and execution on the ground. And when investors start realizing that, they often begin looking beyond the obvious names. That is why this stock can be so compelling. It is different, it is unexpected, and it gives you exposure to the broader build-out story from a much less crowded angle. This is also the type of stock that makes viewers stop and say, wait, I never thought about that. That reaction matters because it means the opportunity still feels underappreciated. But once again, this is not a guaranteed winner. The story depends on execution. It depends on continued project momentum. And it depends on the market continuing to reward that narrative. So the bull case is that AI-driven infrastructure growth creates more hidden winners than most investors realize. The risk is that this is still a narrower and more specific thesis. Still, as an overlooked US listed name with a non-obvious angle, Target Hospitality is absolutely worth watching. Now let's move to the third stock. This one feels more grounded, more industrial, and in some ways more credible to a serious investor audience. The third stock is Powell Industries. This is one of those companies that fits the classic idea that the biggest winners in a major boom are not always the flashy names. Sometimes they are the companies supplying the backbone. Powell Industries is tied to electrical infrastructure, power systems, and industrial energy related equipment. And in today's market, that matters a lot because the AI boom is creating a huge demand for power. AI models need computing. Computing needs data centers, and data centers need electricity. Not just more electricity, but reliable systems, distribution infrastructure, and serious industrial grade support. That is where Powell comes in. This is what makes the story so strong. It is not based on hype, it is based on a very practical need. If the United States keeps expanding digital infrastructure, power systems and electrical distribution will remain a critical part of that growth. And that means companies in this space could continue benefiting from one of the most important trends in the market. That is the real attraction here. Powell is not the glamorous part of the story. It is the necessary part of the story. And often, the necessary part is where some of the strongest businesses are found. Of course, there is still risk. A strong business does not automatically mean a low risk stock. If expectations get too high, even a good company can become vulnerable to pullbacks. So the key with a stock like Powell is simple. The business story may be strong, but valuation still matters. The bull case is that power demand, industrial expansion, and data center growth continue supporting business momentum. The risk is that the market starts pricing in too much optimism. Even so, among less obvious U.S. stocks, Powell Industries stands out as one of the more credible names to study. Now let's get to the fourth stock. This one gives exposure to another part of the AI and data center ecosystem that casual investors often ignore. The fourth stock is Fabrinet. Fabrinet is interesting because it gives investors exposure to the hardware and optical side of the broader technology infrastructure story. And that matters more than many people realize. Everyone talks about AI chips. Far fewer people talk about the networking layers, connectivity systems, optical components, and technical infrastructure needed to move all that data efficiently. But those parts matter too. In fact, they may become even more important as computing demand continues rising. And that is why Fabrinet deserves attention. This is not usually the first stock retail investors mention. It does not have the mainstream popularity of the mega cap names. But that lower visibility can actually be part of the opportunity. Because when a company has real business momentum, but still does not have full mainstream attention, the setup can become very interesting. That is the case investors often like. Real fundamentals, a strong trend, and still not fully crowded. That does not mean the stock is guaranteed to surge. It means the ingredients are there for investors to take it seriously. With Fabrinet, the appeal is that you are not just buying into a headline trend. You are buying exposure to a company that may benefit from a critical role inside a growing technology ecosystem. The bull case is that continued demand in networking, connectivity, and infrastructure hardware helps drive further growth. The risk is that technology and industrial demand can still be cyclical, and if momentum slows, the stock could reprice quickly. So once again, this belongs in the category of stocks worth studying, not stocks guaranteed to win. Now, if I had to break these four names into categories, I'd put them into two groups. The first group is the more surprising, higher upside story stocks. That would be Applied Digital and Target Hospitality. These are the names that feel more under the radar. They feel less obvious, and if their stories keep working, they may have more explosive upside, but they also come with more uncertainty and more volatility. The second group is the more grounded and more credible infrastructure names. That would be Powell Industries and Fabrinet. These may feel stronger to investors who prefer more practical business stories. The logic is easier to follow. The businesses are tied to real infrastructure needs, and they fit into the broader idea that the AI boom is not just about software and chips, it is also about power, networking, hardware, and the physical systems supporting the entire ecosystem. And that is really the big takeaway from this video. If you are only watching the biggest names in the US market, you may be missing where some of the more interesting upside could come from. Because sometimes the next opportunity is not in the stock everybody already knows. Sometimes it is in the overlooked companies quietly benefiting behind the scenes. So again, the four stocks are Applied Digital, Target Hospitality, Powell Industries, and Fabrinet. Not guaranteed winners, not low risk plays, but definitely the kind of under the radar US listed stocks that I think are worth watching closely in 2026. And as always, the goal is not hype. The goal is to find strong stories early, understand the risk, and focus on where the real catalysts are. If you enjoyed this breakdown, subscribe for more US stock content focused on real opportunities, not just popular names. And let me know in the comments which under the radar US stock are you watching for 2026.